Hi, it's Chad Wilson, and it's time for the monthly market minute update. The numbers are in for July, and I'm going to give you my thoughts on those. So nationwide, what we've seen is that V-shaped recovery everybody's talked about. On the coasts where the market's really tanked, they're really bouncing back strong. So we've had a very stable St. Charles County, St. Louis County market, and we haven't experienced the big bounce back because we didn't drop as much. Interest rates continue to remain low, and that refinancing boom is just still taking place. That hasn't slowed down at all. Lenders are stressed. The whole mortgage industry is stressed right now as people are trying to get their refis in, and what we're seeing is now loans are taking a little longer to get done, and that's just normal because of the volumes. So what we're seeing right now, some of the statistics. So the units sold year to date is up. The year-to-date sales volume is up 6.83%. The median home price up 6.61%. We've still continued that strong increase in appreciation on home values. Year-to-date pending sales is up. The year-to-date median days on the market is down. It's down to 13 days compared to 16 days this time last year. And the active inventory is down as well. So we're still seeing huge returns. We're seeing strong appreciation rates continue. The market hasn't stopped accelerating like it's been doing. It is just a wonderful housing market right now. On the commercial side, what we're seeing is the office space, the vacancy rates are starting to increase. So we kind of expected that as the pandemic hit and employers were sending employees home to work from home. They're realizing that they're still getting the same productivity, and the need to have a big box building and commercial space is lessened. So the employers or the owners do not want to necessarily pay for all that space if they can let employees work from home. They're not wanting to pay to condition the air, so heating costs, cooling costs are all going to go down with lesser space. We've also seen like Pinterest in San Francisco. They just paid almost $90 million to get out of a lease that they were doing. So they were trying to have this big space that they were getting ready to build out, and they decided that wasn't going to work. So they wrote a check for $90 million to get out of that lease. So that's a little different on the warehouse and the industrial side. So that space is actually picking up a little bit. The requirements there, as we move toward more of an e-commerce model, the requirements have picked up. So with the whole space, Amazon and their building in St. Peter's, that's kind of a trend. We hear that Amazon is starting to look at maybe repurposing some malls. So they'll use that for part of their e-commerce space, but also have a storefront to allow people to come in and potentially buy from the store. So one of the areas that we haven't talked a lot about is the investor market. Houses are still selling quickly when they are priced right and they're in good condition. But if they're not in great condition, then sometimes you can struggle. And sometimes the only opportunity because of timing or because of condition may be an investor. An investor will come in and basically pay cash for your house, and they can close very quickly and they accept it as is. So if you have a house that maybe meets that condition, let us know. We have a network of investors that are looking to buy, looking to do rehabs, and that's what they're looking for. Just quick sales. If you need out of your house fast, that's what they can do. And just to kind of give you an idea from where we are from the Chad Wilson Group, I have our specific numbers. So last year in July, we had sold, between listings and the buyer side, we sold 30 in July. This year we've sold 32. New listings on the market, last year we were 10. This year we're at 16, so we've increased our July numbers year over year by 60%. So what we're seeing is right now, people are asking more for land. We've had more land requests in the last 3 months than we have in a while. So we're seeing that trend happen, and we'll probably continue to see that trend. It's the same for the second homes. People are still looking at Lake of the Ozarks. We were down there last weekend, and we saw that the market down there is just as hot as it is up here. Condos go up on the market and they're gone. And a lot of condos are selling before they go on the market. So we're still seeing that trend continue. Not sure when or what's going to stop that. One of the other things that we're seeing right now is lumber costs. So we know that lumber's way up. That's been in the news. Everybody's talking about it. So I've heard numbers from $14,000 to $20,000 per house that's going to cost the builders. That is a huge number. So I think that the lumber costs on the building side can represent 20% of the total cost, and that piece has gone up just significantly. So how are the builders going to react to that? Obviously, we're going to see some price increases. So if you have any questions or needs about real estate, from residential to commercial to selling an as-is property to land to second homes, anything like that, please give us a call. We have a whole team that is ready to help you.